Good morning, good morning, good morning. Welcome to today's live stream. How you guys doing? My name's Tyler. If you're here for the first time, super glad that you decided to join us this morning. During the live streams, I'm going to be taking you through the wild world of day trading futures. I'm going to be sharing my daily trading bias. I'm going to be sharing my trades. Yesterday, we didn't take any trades. Today, I'm hoping that we get a little more action today. Let's go ahead, open in prayer. Lastly, if you want to use Apex or if you use a funded trader account, you can use the code DTJ and you can get up to 80% off your next eval account with Apex. You can find all that information right up in the chat, pinned right there. I greatly appreciate it. It allows me to continue to do this as I continue to go on my own trading journey. So let's go ahead and rock and roll. Father, we just thank you for the opportunity we have as traders to trade. Father, I thank you. I just declare a verse over everyone here, and that is 1 Corinthians chapter 9. It says, in all things, at all times, we would have all that we need. We would abound in every good work. So I declare that everyone here would abound in their good work. And that good work for us today is going to be trading. So, Father, we ask for your favor and your blessing and your insight into the market. Father, we thank you that we are patient and we receive what you have for us. We choose not to chase. In Jesus' name, amen. And with that, folks, let me just say it's negative 17 degrees outside right now. The wind chill is negative 17. I am so glad that I am sitting in front of my computer. Holy cow. Good morning, T, Juan, Ricardo, Tony. Good morning. Good morning. Good morning. Let's take a look and see what we got going on in the market right now. We have news. We have FOMC minutes coming out later today, so we're pretty much free and clear, ready to trade. We've ran the previous week high right here. That happened yesterday. And we've basically been playing up and down through it yesterday and through the morning session. We have our Asia high, our London high, our midnight open, and our opening range gap where we are currently right now. We also have our new day opening gap that is perfectly overlapping from yesterday. We have new day opening gap here from Monday to Tuesday, and then we have from Tuesday to Wednesday right here. Coincidentally enough, it just perfectly overlaps. So, and that also overlaps with the previous week high. So that previous week high really is a level of interest. Now, because we've overlapped it a few times, there's not much I can do with it right now. Where we are currently at, it currently looks like a market maker sell model. And if we were going to have an area of interest, this fair value gap right here, basically the new week opening gap. We have a breaker that's right here. That also fills our opening range gap and fills the small fair value gap in here and is in the midpoint of this fair value gap, this bearish BISI, or this BISI right here. So if we could see maybe price come up to here and a continued sell-off, that would be of some interest there. Designer Aid, good morning. Can we open for chat? I don't have no idea what. Oh, if you're looking for somebody to chat with you individually, you can jump off stream. We're not interested in that. I'm not sure if that's what you're saying, designer. If you want to clarify, clarify. If not, we'll just kick you out. I really don't care. All right, so let me clean up this chart here. And we're also sitting in the new week opening gap, sitting right here. So that's the 15-minute chart. If we jump up to the 4-hour, We have displacement. We have this nice rebalance right there on the 4-hour with a potential expansion lower. That looks bearish. We haven't ran the previous day high, so 77% chance we either run this low or this high today. Based on the structure, I'd like to see it run lower. Daily fair value gap. We got a large wicked candle right here. And we have our low right there. I won't use the dark theme. I specifically went to the light because of how many people preferred the lighter screen over the darker screen, and that was like 7-8 months ago. So I'm just so used to this now that I won't be changing it. Let's drop down back to the hourly here. Hourly, as far as any area of interest to the upside, I'm not seeing, really just we have this breaker, this hourly breaker right here. And we have an order block right there that we've already ran into. So unless we, in regards to the 930 model, I'm not sure I'll be taking it. Main reason is our structure is showing bearish structure right now. The only way I would be interested is if before the bell we run these lows here and then we start moving higher. I think that's the only way I'd be interested in that. Or we might, it could be this one right here too. A sweep below those equal lows. Four-hour time frame, we have this 4-hour fair value gap sitting right here that we have partially filled, and we may close it here in the next 30 minutes. We'll see. I don't see a lot of resistance. I see potential low resistance liquidity for today. We got a day. We have this hourly fair value gap right here. Market opens in 5 minutes here. Good morning, Eva. How you doing? Rico, good morning. Sell side liquidity sitting at 22,160. Well, if we're really going sell side liquidity, if we're going to look at previous day price action, if we go to regular trading hours, you'll see this right here. And the only liquidity from yesterday is right here. And we would look at the PM session, the low and high from the PM session. And so we have 330 right here, and that's 261. So you could use that as some liquidity, but I would say the big liquidity that I would be looking at is down here. the previous day low. All right, so now that we've swept this, I'm not opposed that we've swept these equal lows. If we start pushing higher in the next 3 minutes, I'm not opposed to trying the 930 model. Wow, that was hot. That was way too hot. Holy cow. I just burnt my tongue. Wow. Well, don't do it yet here, buddy. How big is this? 24, it's 20 handles. Man, that would have been a nice breaker right here. Boom, right? That London would have been on fire, man. London would have been on fire. 5 minute, we potentially have an inversion right here that's gonna take place. Sweep of liquidity, a little push. I like that. Hourly BISI. was really hot. No fair value gaps yet this morning. So price action's kind of staying inside, overlapping. I mean, we do have this breaker right here. Small new day opening gap, so look for price to create a short-term low, then run before it's reversing. Oh boy, oh boy. Nothing looks really good here. There's a breaker right there. And our first presented fair value gap. We also have our other breaker. So we're between two breakers. We're a 15-minute breaker and then this 1-minute bullish breaker. I don't know which direction. I want it to go lower, but I'm just not seeing the structure that I like here. I could see it go both ways here. We're obviously filling the opening range gap right now, this right here. And we're coming up into the new day opening gap sitting right there. Protocol, what do you mean, Judas? What do you mean protocol? I don't know if it wants to go up or down. I mean, we have structure for a bullish breaker right here. We have a bearish breaker right there with the sweep of liquidity. And I'm not sure which way it wants to go, so I have to sit on my hands. If we break below this, the first fair value gap to the downside, I would play that to some sell side liquidity. But right now, I'm indifferent. I don't know. I mean, I would say the 15-minute is more has more say than a lower time frame. That's for sure. So if I had a preference, I think it would be to the downside. I think I'm going to go ahead and let's see if this closes here. I'm going to take this short right here from this inversion down. I'm on my micro account. There's the trade right here. Let's see what happens here. Close will be, I'll close this trade if it closes above that fair value gap. All right, let's get this push right below. Come on. Give me a drop right here. Come on. You know you want to go. Stop needs to be moved to break even once we run this low right here. Stops at break even. Tapped out. There we go, baby. 25 points. Boom. Boy, that felt good. Man, did that require patience or what? I took that on my small account challenge as well. I kind of just need to... I hate when it runs as slow as it did. Like this. I mean, that was... But I gotta get better at it. So, played out, folks. Anybody participate in that? Hugo. All right. Nice job. Good. I'm glad we got some winners here. Judas, you're still short. Way to go. Way to go. Yeah, I think there's room for lower. There's just not, it's not as smooth as I'm wanting. There's nothing here that's low resistance. So I'll just take profit for 25 handles. That's not a bad idea. If you do one standard deviation of that right here, you're looking at, what is that? 22,123. My only concern about that is you do have a BPR right here. We do have this BPR that was very algorithmic right here. I actually did a small long in the afternoon here, but then I did another small, got stopped out, and then it ran on me. That would have been beautiful to be a part of. But my only concern is that this finds support to push back towards all-time highs. That's the only thing I potentially could see. Thanks, Sean. Sat on my hands for that one due to lackluster price action and the small opening range gap. Yeah, I totally get it. The only thing that caught my attention was the following. There was 3 things that stood out to me, okay? Number 1, we swept liquidity right here. Number 2, we ran into the breaker right here. Actually, there's 4 things. Number 3, we filled 75% of the opening range gap. Number 4, we inversed this with a giant down closed candle. So when I see so many overlapping factors, it's just like I have to participate. I mean, it's just like I have to take the risk. We had So if I was to go over it again, we had a sweep of liquidity right here. We have a 15-minute breaker we ran into right here. We filled 75% of the opening range gap. We had a large displacing candle, and we closed below the first presented fair value gap. And we had a close target right here. We had a close single target, and I'm glad that it ran not only that level, but this level at the same time. So all that played out nicely. So when you have overlap, it's the overlapping confluences that gives you the confidence to start taking potential trades. Not price action isn't always going to be pretty. And I'm grateful. It was decent. We never violated. I can't tell you how many times I've seen a close below a fair value gap, a close above a fair value gap, and then it runs. We want to see it respect that inversion, and it did so here 1, 2, 3, 4 times before it ran. It wasn't easy holding through that, but now I'm hoping we see another drop here for, who was it, Judas? I'd like to see if Judas can get a little bit more. That would be nice, huh, Judas? So I did my small account challenge trade. I'm $180 away from completing that challenge of turning 500 into 1,000 with only 1 trade a day. So I'm excited about that. Once we hit 1,000, I'll do 1,000. I'll do a small account, $1,000 account challenge of turning it into 2,500. So that's definitely going to probably be a longer challenge. This challenge is taking, my guess, it'll be about 30 trading days total to get that $500. It took me a good 2 weeks, 2.5 weeks to really get the feel for how to trade one trade a day. That was a new skill set I had to learn. Oh, gotcha. All right, Joe. Let's see if we can get it to drop. But right now, we're just going to let the price play out. We have 10 o'clock coming up here in a second. We'll see if it gives us any clear indication on what it wants to do. It does look as if it's just going to inch lower based on everything that I just described for that inversion. Gold is almost at 3,000. Folks, I don't know if you're paying attention to everything that's going on with the Fort Knox, the gold reserves. There's a chance that Trump might try to put us back on a gold standard. If that happens, I think gold could reach $5,000 to $7,000. We're sitting just under 3,000 right now. Joe, what I hear you saying is for high resistance liquidity runs, you trade turtle soups. I was actually thinking last night, I'm like, I want to come up with, I said this to myself, I said, I need to come up with a model that is good in high resistance liquidity runs. And I was thinking of turtle soups and targeting equilibrium of the previous range. That's kind of what I was thinking. So in this case, it would a turtle soup right here, a turtle soup entry right here, and then the target would have been equilibrium right here. So that would have given roughly about 24 handles on that. The reason I would do equilibrium is because even if, let's just say you're wrong that it wants to run lower, okay? And we're in high resistance liquidity. Is after you sweep liquidity like you do right here, I would say a majority of the time, if price wants to move higher like this and it wants to go higher, it will come back down and tag the midpoint of that range. So this is me spitballing and kind of putting together a model before I've back tested it. It's turtle soups when you know it's high resistance, and you're not gonna know right away. You need to let price play out. But once you have an obvious swing high, when we see price run that swing high and we have a potential target to the bottom, you could probably take that turtle soup and target the equilibrium of the range as an easy target. I'm probably going to go back and test this and do some back testing on it because I want something that I can take, 1 or 2 times in high resistant markets. That because I can't tell you how many times did we do that yesterday. This right here was high resistance. All of this price action is high resistance. So if you go back and you look at some of this price action, and you find a high that you can sweep, I'm testing this out right now. I actually haven't done this to see if it actually works. So there's our sweep of liquidity right there. Okay, so there would be a sweep of liquidity. And then let's find out what our midpoint is of this range. Okay, this is insane. Look at this. I just put out the midpoint from this low to this high, this low to this high. The midpoint is right here. Okay? If you would have turtle souped this, look what it hits and then bounces from. Boom. And it moves higher. What I'm trying to say is I think this midpoint target, the equilibrium of the previous leg that created the high, is what you could easily target. So here we have another sweep of liquidity right here. If we have that sweep of liquidity right there, let's drop that up there. It sweeps that liquidity right here, and it runs for the midpoint, and it continues lower. Okay, so great. Now let's look at this one right here. We sweep this low right here. We sweep this low right here. That would be an entry point for a turtle soup. Let's find out what the midpoint is here. Look what it does. It runs to where? The midpoint of this price leg. I think I'm coming up with a model, folks. I think I'm coming up with something here. The other thing that you could target is you can target the last fair value gap. So sometimes you may not sweep liquidity like this, but it will come up to the last fair value gap. It came up pretty close to that and stopped. It actually came to this down close candle. This was actually a breaker that it hit. A high, low, higher high, and it breaks lower, and it came back up to it right there. But I think there's some validity to that idea. It doesn't mean you're going to take every trade, and you probably need to wait for a 1-minute change in state of delivery on that. Because, for example, if you just take this trade right here as it's running lower and it runs this low, well, where do you get in at? You're going to get smashed. So I think you got to wait for a 1-minute change in state of delivery for something like that. To be honest, at this point right here, when we would see this, I wouldn't think that we're in high resistance liquidity. I would still call this low resistance liquidity. It was when we start going back up and not making any lower lows that I would have done that. All right, so it looks like we're dropping now. Previous day low is probably in the sights for the target. Yes, we did. I took that to the sell side liquidity sitting right here, Ted. Good morning. How you doing? Judas, Joe, you say, yo, 1.5, holding half for previous day low. Yo, just hit about 2. Previous day low in sights. When previous day looks, I'm looking for longs. I mean, I'm partial to all-time highs. And I like the London high here and the Asia high. We'll see what it wants to do. Thanks, Ted. Hope you're doing well. We'll be back here tomorrow as well. I'm thinking I do like that idea here. But once we run that previous day low, yeah, I mean we could reach. We can't ignore the previous the fair value gap. We can't ignore that. So if it does run the previous day low, we need to see if it runs below it, finds support, and then runs lower, or if it bounces off of it. Because we also do have a volume imbalance down here as well. Four-hour. You know what? I probably would have said that there's a chance that we... Hang on. I got stuff in my throat. I probably would have said we would run for the daily fair value gap if we closed below this 4-hour fair value gap on the 4-hour time frame, but we didn't. So now I'm kind of looking at a wick down here, consolidation with a move maybe higher. But I expect consolidation around the daily, the previous day low. Nice displacement there. If you guys appreciate the commentary and the on-screen trading, hit the like button for me. I greatly appreciate it. So I'm not going to take any trades until we hit the previous day low and see how we react to it. The problem with trying to go short right now is we could retrace all the way back up to here. We could retrace back up to this low right here. It's a mitigation block. We got a fair value gap right there. And then we could run lower. So if you get in this fair value gap, you could potentially have drawdown of 20, 25 handles. Or you just get in this fair value gap and you put a tight stop and you hope that it runs lower. I guess that's an option. And it looks like that may work. ES is not making hardly any movement. It still has a long ways to go for that previous day low. roughly 15 handles. That would have not been a bad entry. You got the order blocks here. You put your stop right above the high of that order block. $10 handle stop loss. To see if it wants to respect this fair value gap. The bodies are staying in the discount portion, which is good. And I'm going to have to get off a little early here today, folks, because my kids have a late start today. Because of the negative 17-degree weather, they delayed school to start here in about 45 minutes. So I'm going to have to leave probably around 10:45. I'll probably have to bounce. Yeah, you could short, but like you just said, it's pretty high risk. The probability is not on my side. Because it could go all the way back up to this fair value gap up here. I mean, so far it looks good. The old me would go short right now once I saw that once I saw that flash. I would be short right now, but the old Tyler would be short. Letting the printing of the candle determine if I'm getting in a trade or not. Like the flashes of only a second of a flash. Like a flash of a candle to determine if I'm going to get in short or long. I can't tell you, just like, man. Some of the things I did. And sometimes still catch myself doing, guys. Ugh. ES looks like it wants to crumble. Yeah. I think we're going to run lower. Paul, how do you adjust a stop loss? Let's say I want to go short right here. Okay, so I'm short on a paper trade. You'll see this sign right here that you can drag for your take profit and your SL for your stop loss. If it doesn't give you that option, all you have to do is go to the plus button right on the right here, and you can select stop. So there it puts a buy stop for you. So that's how you would set your stop loss. Now the thing about it is when I exit this trade, watch what happens. I exited the trade, but the stop loss that I set separately did not show up, did not get on there, or was not removed. So you got to make sure that you always go back and you look to make sure all of your stops and your targets have been removed, because if you leave it on, it will stay on and you'll get filled at some point. All right, we'll take a turtle soup right here. Turtle soup right here. We'll do a 10 handle stop loss, 51 to 61, and a 1-to-1 trade We'll go 2 contracts so that I can take a target down here, and we'll take 1 off at 10 handles. So then we would target 42. So we place a limit order just like that. We just swept this high right here. Oh, you would do a 1-to-1 to the previous day low? There's no way I'm doing that. That would be insane. That puts my stop loss. I can't do that. That's my stop loss. That would be my stop loss. That's insane. I can't trade like that. Sure, if you're doing a small account, I get that. The way I trade, I want small and tight stop losses. So on my small account challenge that I'm doing with 1 micro, I'm doing 10 to 20 handles. That's it. That's it. There's no way I want to do that. So 10 handle stop loss would be right there. Yeah, totally. I mean, I get it that I'm not dogging on the strategy at all. Not at all. I know traders that do that. There's no way I could do that. There's no way I want to do that. Because I know I can be profitable with a 10 handle stop loss. I know that I can be profitable with a 10 handle stop loss. And this would be an example of one. And I'm doing that turtle soup, which I don't trade. I'm going to look more into it. Because I think there's some opportunities in high resistance liquidity for that. But I know that I can be profitable with a 10 handle stop loss. I'm doing it right now on my small account challenge. I take 1 micro. I'm allowed a 10 to 20 handle stop loss, 1 trade per day, and that's all I do. Yeah, the stops on turtle soups are pretty tight, but if you're doing a 1-to-1 risk to reward on this, your 1-to-1 risk to reward, like you just said, to the previous day low right there, is going to be way up here, right? For me personally, once I hit my TP like that on a 10 handle, I'd be moving my stop to break even. Why didn't it? Let's exit out of that. I'd be moving my stop to break even to protect the profit. So then if it stops out, it stops out. I would rather get stopped out 10, 15 times at break even than have to deal with a big drawdown position. Interesting. I'll have to test it. I mean, I think I want to test that for sure, Joe. I think there's some validity to it. If I can make a smaller stop, I think I would prefer that. 100%. I would do that. We would really need to get through this. We want to see it run through this fair value gap, this inversion right now. because this technically, we want it to be we want to turn it into a reclaimed fair value gap. Oh yeah, I'm all about playing the retracements for either a continuation or a reversal, 100%. I think there's more opportunities in that than just. I used to be a momentum trader. I used to play the momentum trades, breakout trades, and it was an epic fail. Epic fail. I don't have a good answer for that, Joe. My answer would be not wanting to carry the risk. I don't like the big risk. But I think I need to look more into it, because I think there's some opportunities in the high resistance. If you're in low resistance, you're just going to get destroyed. You're going to get destroyed. And those are the days. I think there's probably, is it 50-50 on high resistance and low resistance days? I don't know. But that turtle soup right here was nice. I mean, I'm glad you mentioned something, because I will go back and I'll start looking into it. Because I went back and I was rereading ICT's Telegram from yesterday. And if you haven't read his Telegram yesterday, 100% you should read it. The information from yesterday was amazing. Just psychologically wise. Understanding that not all models are meant for every, and I knew this before, but it was just a good reminder. Not all models are good for every market. They're not good for every set of conditions, and you need to have different models for different conditions. And so that's when I was like, you know what? That is true. When it's high resistance, I constantly see these sweeps of liquidity, and it plays ping pong back and forth. So if I can participate in something like that, I think there could be a model for that. I need to put some barriers around it. So I'm going to put some, it's more than just, it swept liquidity, let's go short, let's target the equilibrium of that price range. I think there needs to be more rules. So I need to figure out what those rules are. And then, just as I shared how I do my back testing earlier this week, I'll probably do that as well. But I think I am ready for something for high resistance markets, and I think that could be an opportunity somewhere there. Looks like we'll get stopped out here. I mean, you could keep your stop loss at the high. Do I not have a? There it is. Those equal highs look like they want to be ran. Not gonna lie. Right where I have my stop loss at. However, we do have this candle right here that's covering this fair value gap. So we may not have to come into this fair value gap. Just to be safe, let's put it at just above the consequent encroachment of that. And let's see what happens. So that's the consequent encroachment of that. See how this wick covers the entire fair value gap, and then this wick covers the top portion of it? That tells me that if price wants to come back up to this level, we may just fill the discount portion of that fair value gap and leave the premium portion unfilled. Yeah, and it could be saving it for later, for sure. But it wouldn't surprise me if it wants to do another little wiki up here and then run down, either. I like all this low resistance liquidity it's creating right here. No, I don't. I'm allergic. Allergic to cats and dogs. I thought about getting like a hyperallergenic, but my wife is African. And in Africa, you don't have animals as pets. You have animals to kill and eat. So she's like, no, we're not getting any pets. Doesn't bother me. If we get a farm, which we will get a farm in a couple years. We'll be moving out to an acreage. That's my goal. We'll get chickens, goats, animals, outdoor animals. You ride zebras, I ride a car. Now, I'm interested to see how this plays out here. Because I see just this lower half potentially being targeted. It technically doesn't even have to go up anymore if it doesn't want to. This candle right here has balanced this whole area. Has balanced all of that. All right, so wicked right into my stop, and it looks like it's pushing right through it. So, see, like I imagining having a stop loss all the way up here just would cause so much stress. Yeah, it could be a fake impulse leg, sure. But the fact that I would have to sit in all of that, I mean, the easy answer is basically saying, well, you have too much risk on the table. That's true. I get that. But I can do more risk, smaller, and have a smaller stop loss and still be profitable. And that's kind of why if I'm choosing between one, that's why I wouldn't want to do it. Well, this is an insane pulse. Let's see what happens here. See if it comes back up to that fair value gap. It just ran into the breaker right here. This is a breaker. What's up, buddy? No, but you can come in. Sure. No, close it, please. The 1008 candle. No, I mean, that looks great there too. I mean, if we're going to drop, this is where I would, with this drop and we have this here, unless we're having a fake break day, I still think that's probably where we go. Yeah, we did have that inversion. I'm glad I mean, for the most part, I'm done trading unless we run this level and we see an aggressive move this way. And if we start seeing it pump higher here, I'm not interested in it because we didn't run the previous day low. I mean, we could participate in this trade running lower, but I don't know if I want to do that. And I got to take my kids to school, so. Diane, how you doing? Diane, the answer is you need to have a higher time frame bias. So what's your higher time frame bias? If your higher time frame bias was higher, then yes, you would take that breaker to the upside. If your higher time bias was to the downside, then you take the trade to the downside. So let's talk about the trade that I took here this morning. Before this drop right here, were you on, Diane, when we took this trade? Yes or no? Because then I won't have to repeat every detail. All right, so let me explain here. So I went short. There was a breaker. So here's the thing. Here's a bullish breaker right here. Bullish breaker. And then we had a bearish breaker right here. Okay? Two breakers. Now, this bullish breaker is on the 15-minute. Okay? This breaker goes all the way back over here. And if I was to jump to the 15-minute, you'll see it here. Okay? Here is the bullish, here's the bearish breaker. We have our high, low, higher high. We break lower, we come up. I really don't care about that. But it's when we come lower and then we have the New York session take place, we have this breaker that I was considering being interested in to see it run lower. Okay, so we have the bearish breaker on the 15-minute. And we have a 1-minute breaker, bullish breaker right here. We have a low, high, lower low, and it starts breaking higher. And I was thinking, well, we could just see it pump higher right here. And it was right here that I said, I don't know what to do. I don't know what to do. I see it going up. I see it going down. And I literally said, I'm going to sit on my hands because I don't know what it's going to do. I said if I had a preference, I would like it to run lower because this breaker is a 15-minute breaker compared to a 1-minute breaker. So if I'm putting weight on something, I put the weight on the 15-minute breaker. Okay? Then we started seeing it start running lower right here. And before this candle closed, I said, all right, I like the idea of the 15-minute breaker, but I'm only going to take it if we inverse this first presented fair value gap right here. It's the first fair value gap of the morning. And it was it was an obvious fair value gap with an obvious target. So, did I take this breaker? The answer is yes, but it wasn't my entry. My entry was when I got the confirmation that we were going to run lower. Because I wasn't sure if it was going to be this 1-minute breaker or the 15-minute breaker. But then if you look closely, you can see so much more confluences for this 15-minute breaker running lower than we do have this 1-minute breaker to move higher. The confluences are as follows. This price leg swept this high right here. So we have a sweep of liquidity. We also filled 75% of the opening range gap. We also had displacement lower. And those confluences tell me that, hey, I think it's going to run lower. So I take the entry based on the confirmation entry. I didn't take this up here. That would have been insane. I was too nervous because I saw this bullish breaker right here and wasn't sure if it was going to run higher. So I said, I'm going to sit on my hands and I'm going to wait till it violates this breaker and closes below this obvious inversion to the downside. And that's where I took my short. I took my short right here at 22,187. And then we sold it down here. So, a couple things for you to understand. Higher time frame breakers are more valuable than lower time frame breakers. If you're seeing a bullish breaker and a bearish breaker, your job is to sit and wait. Wait for more confluences, more PD rays on the chart to show you which way it may want to go. Don't just say one breaker here, one breaker there, let's flip a coin and go. No. Does the bullish breaker have an order block that it's hitting? Does the bearish breaker have a better draw on liquidity? Those are the things that you need to identify, and if you can identify them, you will have better trades. And you can do this all safe. I just posted a video on how, I think I did. Did I post a video? Yeah, how I backtest. Watch that video, Diane, and you can backtest all of these things safely. Every night you can practice this. Every night. And I practice every night. Every night I'm going through 1 day's worth of price action and I'm practicing my model, looking for my confluences and taking a trade to refine that skill. So when I'm here, I can say, well, I think based on what I've practiced and what I've seen in the past and my history with the charts that we want to go lower. So I'm going to take this entry. And then you have to exercise another muscle, which is patience. Letting the trade play out. So hopefully that helps. Does that help, Diane? You can do it. You just need more practice. You just need more time in front of the charts, and it can't be when you're putting real money on the table because you're just going to get frustrated and emotionally drained, and the money's going to do the talking, not the strategy. So go to demo, go to replay mode, go back 3, 4, 5 months and start practicing from that day on, 1 day at a time. 1 day at a time. Practice another day, another day. And I try to do 1 day per day. And with that, we're going to call it a day. I'm going to go take my kids to school. You guys have a blessed day. Stay safe. We'll be back here tomorrow. If you do use Apex, I say this every day just because, all I ask is that you use the code DTJ. If you use Apex. If you guys don't use Apex, no worries. But if you do use Apex for your a funded account, for eval accounts, all I ask is you use the code DTJ. I'd greatly appreciate it. And with that, guys, stay safe, be blessed, God bless you, and we'll see you all tomorrow. Take care.